La verdad es que yo soy el primer sorprendido de lo que me dijo Shamik Dhar, economista jefe de BNY Mellon, en la entrevista que le pude hacer, que vais a ver ahora mismo en exclusiva. Dice que el mayor problema para 2024 no es lo que pensamos con la Unión Europea. Interesante lo que comenta con respecto a los riesgos que hay en la economía. Este hombre que ha sido el segundo de a bordo del Bank of England, del Banco de Inglaterra, que está muy ligado a los bancos centrales y a los ciclos de inflación y lo que tienen que hacer los bancos centrales. Así que atento a la gran entrevista que hemos grabado con él.
Taking into account this analysis, what are the chances of a recession in the United States and also here in the Eurozone? We are so close to.
So, in many ways, I think Eurozone, you might see a sort of steady, relatively, reasonable pickup in growth during the course of this year. I think the bigger issue is the US.
Antes de ver el vídeo al completo, recuerda darle a like, suscríbete a mi canal si te gusta este contenido y déjame tu comentario, que lo estoy esperando.
So let's start with the interview. I want to ask you first, 2024 is again an interesting year for monetary policy. When do you think the ECB and the Fed will make the first interest rates cut?
It's interesting. I think markets are in a much more sensible place now than they were maybe a month ago. So a month, 6 weeks ago, they were expecting rate cuts as soon as March or April, and I never felt that that was particularly likely because central banks are being cautious, sensibly cautious about how quickly inflation and therefore rates can come down. They're pricing in cuts in the US round about June and the ECB round about the same time. I think that's broadly speaking correct. If anything, I think the ECB might start cutting a little bit earlier, although their rhetoric, their commentary so far has been pretty cautious and pretty conservative.
Mm-hmm. Are there risks of inflation picking up again later in the year, in your opinion?
Yes, I think there is, and I would describe it as exactly that, a risk rather than the central scenario. But I think central banks are very aware of the fact that that risk is there. Why is it there? Well, frankly, because economies have held up reasonably well. Now, I know Europe, UK have gone through quite a dramatic slowdown, but the US certainly didn't see anything like the kind of slowdown we expected. And if that's the case, underlying inflationary pressure may remain quite high. And even in Europe and the UK, we're seeing wage inflation that is, particularly in the service sector, really quite strong. So, and the other thing I'd say is that it's not unusual historically for inflation to go through second waves. So I would describe that as an odds against, but reasonable probability that inflation does pick up.
One of the most talked about terms in the year is soft landing.
Yeah.
Some economists compare the current situation with 1995 after the past crisis episodes. Do you think we are in a similar scenario?
Not really, no. I think this has been a far more serious inflation episode than we saw in the mid-1990s, and it's a lot more uncertain than it was back then. And of course, in 1994, 95, we saw a really serious shakeout in the bond market. We've seen that in 2022, but the impact of that on the economies hasn't been quite the same. My feeling is that everything will depend on how wage and service sector inflation behaves in the next 2 or 3 months. If we start to see steady, regular progress, then yes, interest rate cuts become very likely. But if they stabilize or maybe even start to go up a little bit, then markets could be disappointed. And in fact, what we didn't see in 1995 was a second wave or a second pickup in rates. So some similarities, but I don't think that's the best analogy.
And also the expectations of cutting interest rates has changed this year.
Yeah, absolutely. I mean, as I say, during December and January, I think we called that the everything rally. Everything was rallying because markets suddenly were absolutely convinced that rates would start to be cut around about March of this year, that the inflation problem was behind us, that we could focus on stimulating economies again. And frankly, I don't think it's quite that straightforward, even in the US.
And taking into account this analysis, what are the chances of a recession in the United States and also here in the Eurozone? We are so close to?
Yeah, I mean, for the Eurozone, I think the best bet is the worst is behind us and that we'll see a steady pickup during the course of the year. In a way, the Eurozone versus the US is an interesting case because last year, economists like me were saying inflation had got to such a level that actually you probably needed a recession or a dramatic slowdown in order to bring it back down. And that's happened in the Eurozone. You know, that's happened in the Eurozone. It hasn't happened in the US. So in many ways, I think Eurozone, you might see a sort of steady, relatively, reasonable pickup in growth during the course of this year. I think the bigger issue is the US. If we don't see inflation start to come down there, then monetary policy could surprise to the upside. And if it does, then the risks of recession rise. I think it's odds against. Again, I would put, US recession probability at, 30%, something like that, 20, 30%. But it does depend on whether inflation bounces back again.
The financial system has taken a breather for a year after last year's episodes. Can those concerns return this year?
I would never say no in answer to that question because it's always a bit unpredictable. Look, I think the reaction to the small banks crisis last year was exemplary and clearly averted something a lot nastier in the form of a credit crunch or something like that. So the Fed has been very nimble and I think it will continue to be so. The big threat in the US comes perhaps from commercial real estate and possibly real estate more generally. There are concerns that some banks are overly exposed and we've seen a couple of recent weaknesses show up. The Fed itself is relatively confident that it can deal with CRE, but that's something worth keeping an eye on.
Do you think that Europe and the United States will continue to keep the economy afloat via debt issuance and more deficits?
Again, I think there's a distinct difference between the US and Europe here. So Europe last year and the UK as well, moderate fiscal tightening. Very, so if you use it using the OECD's official measure, both Europe and UK saw small fiscal tightenings last year. The US, massive fiscal risk, right? 4% of GDP, even as the economy is at full employment. And that really is unprecedented. The concern, of course, is that this is an election year and it's unlikely that issue will be addressed this year. So you might see relatively loose fiscal policy continuing into this year. That's another potential threat for keeping interest rates maybe higher than the markets currently expect.
And that's my next and last question. And we are entering in the electoral process in many countries, the US, the UK. How can they affect the economy and the markets? For example, greater economic protectionism is likely to trigger more inflation possibilities. So what's your point in that?
Well, let's see what happens. Obviously, all eyes very, very much focused on the US elections at the end of this year. We've got candidates who offer two very different, potential outcomes. I think, actually, having said that, I think both of them are more trade protectionist maybe than previous American presidents. But so I suspect you might see a bit more sort of protectionism coming into the US trade policy next year. Obviously, one of the candidates has a lot more, to go in that direction. I think the interesting thing is that there are so many elections going on around the world this year. In fact, we have an interesting one here in Europe with the European Commission elections. That will be interesting. I think elections generally affect markets only if there's a big surprise outcome. Mostly it's priced in. And of course, but if you have a close election, then then that can swing. That you can have an impact that way. But I think if they're going to impact markets, it's going to be because there's a big surprise somewhere. So I think keeping a close eye on the polls and the direction of which some of the more unusual candidates are polling, that's an interesting way to think about the world, I think.
So thank you very much, Shamik. It has been a pleasure to talk with you.
Thank you. You too.